Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. We will discuss the situation on the euro currency and start from the daily time frame analysis. Well, in general, our overall expectation on the daily time frame and the lower time frames is based on the analysis of the weekly chart. So if you would like to know why we expect such price action that we will discuss, then I suggest you to visit our forum and read higher time frame analysis such as weekly and monthly. Well, in general, we expect the pullback on the daily time frame because this is really first the retracement on the larger time frame, on the weekly time frame after the solid bearish trend. So market still has some significant bearish momentum, and this usually leads to the deep retracement after the first pullback. But this retracement could start differently, and our major task and our major focus now is to catch the pattern by which this retracement to the downside could be triggered. We will start from the first scenario that we have discussed almost during the whole previous week, that is called the Judd Napoli double repo sale pattern. And on the first view it seems that it has been completed, in fact, of the trigger, and this is the confirmation bar of this pattern, and on the first view it looks like perfect, so we just need to enter on the short side of the market and take our profit. But that is not so simple, and this overall price action makes me worry a bit. Why? By the Judd Napoli directional pattern, particularly this pattern suggests some things that should happen anyway. The first demand of this pattern is the initial thrust to the upside, so we have this thrust, it's right here. Then we need the first close below the 3x3 moving average, that is green line on the chart, and market should not reach the significant area of support, significant Fibonacci support area. So that has happened. That day is marked by number 1, it's a blue circle, and the market has shown the first close below this green line. Then we need the failure attempt of the continuation to the upside by the market. So that has happened. Here market has closed above the 3x3 again. This is marked by number 2. And then market creates the new highs. That is preferable due to the behavior of the breakout traders that we have discussed previously. And the confirmation bar of that pattern is when the market unable to continue move to the upside, failure it, and close above the 3x3 again. So that has happened. That is number 3. And that was on Friday. Price action market has closed below this green line, and that is the confirmation bar of the double repo. Since this pattern, this Judd Napoli directional pattern, is the could be the triggering pattern of another bearish pattern on the weekly time frame, the target of this pattern is right here, around 129 area. This could be, as we said, expect the deep retracement, since this is the first pullback. But take a look at the overall picture of this pattern. This thrust counts 8 bars. The consolidation between the first penetration and the second, 1, 2, 3, 4, 5, 6, 7 bars. It's a bit too extended for this thrust. So the number of thrust bars and the number of consolidation is almost equal. The distance between that top of the double repo pattern and that top is a bit significant. So in general, this double repo probably could be treated like look-alike pattern, but not the pure double repo. It's not perfect. It could work, but in general it looks not so perfect as it should be. The failure point of this pattern is that level, 132.61, the 618 resistance from that top, the most far point of the thrust to the low of the triggering on the confirmation bar is right here. So if market will break that level at close and close above it, then this double repo pattern will be treated as failure pattern. That's important. Keep in mind these levels because we will need them when we will try to formulate our possible strategy for the coming week. That is the first sign. And as I said, this price action is a bit extended move by the double repost, a bit too much consolidation, makes me worry because this pattern could shift to another one. Let's take a look at it. This is the same daily time frame, this enlarged picture of the top. This is the same picture as here, but just I increased the scale of it. And this could lead to the 3-drive sale pattern. Take a look. The second top stands precisely at 127 extension of that swing from that high to that low, because this is our butterfly pattern that we also discussed during the previous week. If market will turn up from that level, right from that level, then the 127 extension of that swing to the downside will stand precisely at the same level as 1618 extension from that swing. So that is the consolidation of the 1618 extension of that retracement and 127 extension of that retracement. That is very typical and for perfect 3-drive sale pattern. Also take a look that this levels stands in agreement with the major 3-8 resistance on the weekly time frame. This is solid Fibonacci resistance area 133.63. So that will be the rather solid resistance area. And only after that market could start to move to the downside. So you can see that although we expect some retracement to the downside that should start in the nearer term, well, it could start differently. And if market will reverse here and continue move to the downside, it will erase the double repost. Since the failure level is 132.61, it stands right here. And 3-drive move suggests the cancelling of the double repo, showing the double repo failure pattern and cancelling of this pattern and shifting to the potential 3-drive. On the next chart, this is a bit untypical time frame. I choose the 8-hour time frame because just to reduce the noise on the 4-hour time frame and to show you all significant levels, because it's very difficult to contract the chart and show these levels on the 4-hour time frame. What do we see here? First of all, take a look at this divergence with the MACD indicator right in the area of completing to this butterfly, first butterfly 127 extension. Now market has shown returns right back below this previous high that we have discussed as the necessary condition of the potential move to the downside, and has hit significant area of support that we also discussed on the Friday research. Circumference support 131.40, 131.55 area. Also take a look at that weekly pivot point, this blue dashed line, it's 131.75. It's the weekly pivot point for the coming week. So market stands at really solid area of support and will open right somewhere around the weekly pivot point. If market will hold there and move above that level, continue move to the downside, then our close attention should be focused on this high 132.40 and on the potential level of the failure of double repo pattern 132.60. They are relatively close. The previous top is 132.40 and the failure point of the double repo pattern. If market will not break this level to the downside, this will be the worry sign for the double repo. So it could lead to the continuation move to the upside and the completion of the 3-drive pattern. On the hourly time frame, I just want to show you the classical development, how it could happen with the 3-drive. This is contracted hourly chart. So you can see that 3-drive pattern is very often accomplished staying in the company with the bearish wedge, classical bearish wedge. That's very typical for the 3-drives with the divergence that we have just seen on the 8-hour chart. And very often 3-drive pattern consists of two side-by-side butterflies. So that is our first butterfly that has been accomplished with 127 extension. It's a 4-hour time frame. We're also seeing this. And now the price action could shift to the another butterfly. So if you'll take a look on the hourly time frame, well, that is just a suggestion since we have just the first swing. Will it be butterfly or not? It's difficult to say, but very often it happens. And 127 extension of that butterfly becomes the 3rd drive of the potential 3-drive pattern. Now our major attention in the beginning of the week to that level, since we said that if market will break it to the downside, first it will erase the harmony of the 3-drive, because that retracement to the downside is about 200 pips and that retracement to the downside is about 200 pips. Well, it will break this wedge to the downside and it will put under question the potential free drive because it will move below the weekly pivot point and could continue move to the downside. Then this level will shift lower and will break the harmony of this free drive. In this case, the equilibrium will probably move on the side in advantage of the double ripple pattern. So how we could trade this a bit sophisticated environment on the daily time frame? I see two possible ways to trade it. The first way is the conservative one. You should, if you would like to apply the conservative approach, then probably you should wait for the either erasing of the free drive pattern, the continuation move to the downside, and then try to enter some retracement, shallow retracement on the upside, or wait the completion of this free drive pattern and trade it purely from the 133.63 area if market will form it. That is, I suppose, the conservative approach. The aggressive approach is to take the signal by the double ripple pattern, trying to enter short here or maybe on some retracement on the intraday chart with placing stop above the level of the failure. If market will take your stop and show the double ripple failure pattern, then you should reverse your position, because the failure double ripple pattern is also directional signal that suggests that market will continue higher. So here you should reverse your position, because if this will happen, then you will have the significant confidence that free drive pattern is already underway, because market will be somewhere right here when it will erase the double ripple pattern. And also you will have the bullish directional pattern by the Judd Napoli. It's the double ripple failure pattern right here. So you could reverse your position with the minimum target is around 133.60, 133.70 area. That will allow you to return your loss from this trade. Okay? And when market will reach that level, you could try to focus purely on the free drive trading. So that is an aggressive approach. Personally, I like the aggressive approach because now it's very difficult to predict which pattern will dominate. Also, it's very difficult to predict how market will behave on intraday charts. Maybe you will have some chances to move your stop to the break even, and this will give you some reducing in the nervosity of the current situation. So you can probably come watching how market will behave on the intraday charts. If you will be able to place your stop at the break even. It's very difficult to comment these potentials now, but in general, our view is as follows, as we just discussed: two ways to trade: aggressive or conservative. Wait either pure the free drive pattern when the market reach it, or will break it totally with the move to the downside. Okay, or try to trade both of them and apply the aggressive way. Try to take this pattern. If it will fail, to reverse your position to the long side, return back your loss, and try to trade this free drive pattern purely. That is our trading plan. And also we have discussed how market can behave on intraday charts right in the beginning of the week. So keep an eye on the significant levels, watch for the clear patterns, and trade according to your trading plan. Maybe you will find some another decision how to trade it according to your trading style, your rules, your risk management, and other personal things. So good luck to you. See you in the next research.